Good day, everyone. My name is Brian, and we are Group 9. And today we will be presenting on tax planning strategy for middle incomes earners in Malaysia. This topic is especially relevant in today's economic climate, where smart financial planning can make a real difference in a person's quality of life. And for now, I would like to introduce that my group mates that is present for these slides. And the first one is me, Brian, and the second one is Divya Nadaraja. The third one is Huyongkan, and the fourth is Harif Junurain bin Zainal Mufid, and also the last is Bugel Munyandi.
Hello and welcome. Today I will be representing the introduction to our report on tax planning for middle income earners in Malaysia, also known as the M40 group. Tax planning plays a vital role in financial management across all income levels. But in Malaysia, it's especially important for households in the M40 category. This group includes family earning between 5,250 and 11,819 monthly, as reported in the 2022 Household Income Survey by the Department of Statistics Malaysia. Why is this group so important? Because they represent a key segment of the economy. They are not only active consumers but also responsible savers and investors. Smart tax planning can significantly improve their disposable income and overall financial well-being. This report aims to provide a comprehensive overview of tax strategies that are both legal and ethical, specifically within the Malaysian taxation framework. We will explore dedication, exemption, reliefs, and incentives that are clearly outlined in the Income Tax Act 1967, an official guideline issued by LHDN, the Inland Revenue Board of Malaysia. It's also important to make clear distinction here. Tax planning is not the same as tax evasion. Tax planning is about using the law wisely to minimize tax liabilities, while the tax evasion is an illegal act that can lead to serious consequences. Our study also looks into some common concerns and grey area faced by middle income earners. We will discuss real life situation and offer best practice to help this group navigate Malaysia's tax system with more clarity and confidence. By the end of this report, we hope to provide a complete picture of how tax planning works in theory and in practice, helping middle income Malaysians make smarter, legally sound final decisions. Hello everyone, in this section I will explain the concept of tax planning. It's not just about filing tax returns, it's a structured way to manage finances to minimize tax liability legally. For Malaysian middle income earners, this means understanding the Income Tax Act 1967 and making full use of available deduction, relief and exemption. This includes family, education, medical expenses and contribution to EPF or PRS. Tax planning also means recognizing tax-exempt income like certain dividends or allowances and making smart investment choices that reduce taxes. Most importantly, tax planning is a legal and ethical, completely different from tax evasion, which is legal and punishable. In short, effective tax planning helps you save more, invest wisely, and improve your overall financial well-being. That's all from me. Thank you.
Personal tax relief help reduce your taxable income. You can claim up to 7,000 ringgit for EPF contributions and life insurance. For lifestyle expenses like books, gadgets or fitness equipment, there's a 2,500 ringgit relief with another 2,500 ringgit if you buy a laptop, tablet or smartphone for work or study. Medical expenses for serious illnesses allow up to 8,000 ringgit in relief. If you pay for child care, you can claim up to 3,000 ringgit, and if you support your children's education or a child with disabilities, you may get 2,000 ringgit to 8,000 ringgit in additional relief. Some types of income are completely or partially exempt from tax. Interest earned from fixed deposits is tax-free if it meets certain conditions. Some dividend income from investments is also not taxed. Allowance like travel or cost of living are generally exempt. You also do not have to pay tax on gift or inheritance you receive. If you lost your job, compensation for loss of employment is partially exempt depending on the situation. These exemptions reduce the amount of income you need to declare. You can reduce your taxes by making smart investments. Contributing to a private retirement scheme gives you up to 3,000 ringgit in tax relief each year. Saving for your child's education through SSBNI allows a relief of up to 8,000 ringgit. Other investment like unit trust or government savings schemes may also qualify for tax benefits. These reliefs encourage Malaysians to build long-term savings while enjoying yearly tax reductions at the same time. Taxpayers in Malaysia face several challenges. Tax laws are often complex and change frequently, making them hard to understand. Many people are unaware of all the reliefs and exemptions they can claim. Keeping records like receipts and documents for tax filing takes time and effort. Professional tax advice can be expensive and not easily accessible for middle income earners. It's also difficult for some to tell the difference between legal tax planning and illegal tax avoidance. Lastly, some relief have very detailed conditions that are hard to follow.
Hi and Assalamualaikum. My name is Harik and I'm going to present best practice for tax planning to help save time, reduce stress and maximize returns. So let's get started. The first one is start early. Think of tax planning like planning a vacation. You wouldn't book flight the night before, right? By starting at the beginning of the year, you avoid last minute scrambles and errors. This gives you time to track expenses, strategize deduction and stay calm when deadline approaches. And for the second one is keep receipt. That coffee with client, medical bills, education fees, save every relevant receipts and organize them monthly in a folder or use app like Google Drive or expense tracker. Trust me, when tax season hits, you will thank yourself for being prepared. For the third one is use e-filing. Malaysia's LHD and e-filing platform is a game changer. It's fast, secure and even auto-calculates your tax to prevent errors. Plus, you get instant confirmation and no more waiting in line or mailing form. And the fourth one is review deduction and relief. Did you contribute to EPF or PRS? Pay for SSPNI education savings or have medical expense? Cross-check all eligible claims and all that relief. Missing even one could mean leaving money on the table. This could cost you. And finally, get professional advice. If you are handling investment, running a business, or just feeling overwhelmed, consult a tax agent or attend your employer's tax briefing. A little expert guidance can save you from costly mistakes. And for conclusion, to recap, first one is start early, second one is keep receipts, e-filing, and review deduction and ask for help when needed. Pick one to implement this week and you will be Tax Planning Pro in no time. That's for all. Thank you for watching.
In conclusion, tax planning is not just about saving money, it's about managing finances responsibly and ethically, especially for Malaysia's middle income earners. By understanding and using the reliefs, deductions, exemptions, and incentives available under the Income Tax Act 1967 and LHDN policies, individuals can legally reduce their tax burden and increase their disposable income. However, challenges like complex tax laws, lack of knowledge, and limited access to advice can prevent people from fully benefiting. To overcome this, proactive planning, continuous learning, and good record keeping are key. With the right knowledge and ethical practices, middle income Malaysians can legally save on taxes, improve their financial health, and contribute to a fairer taxation system. This is the end of our presentation. Thank you.